An audible sigh of relief, I think, from the Federal Reserve here, managing to take out the sentence now that they are monitoring inflation developments closely. What do you make of that, and also the use now of this term symmetric?
Well, for the last couple of years, they've had the same sentence or very slight variations on a sentence that says, we are confident that inflation will move up to the target of 2%. And it hasn't. It's stayed well below. Now it is almost at the target, which is good. And they are saying, well, we've almost got it where we want it. And now we can worry about it's either going too high or going too low. I don't think there's any great significance in that sentence, but it's nice to see that finally their prediction that inflation would move up a tiny bit has come true.
And it seems to be that the read as well on that symmetric language is that the Federal Reserve is going to raise rates as many times as it's going to raise rates and not pay as much attention to whether we're a little bit above or a little bit below that figure. How many rate increases at this point do you think that there will be this year?
Oh, 2 or 3, and they won't tell you until they do it, because they don't know any more about this than we do. The economy seems to be on the track that they thought it would be on, namely very tight labor markets, pretty good growth, and inflation coming up a little bit. But they're going to watch it, and they'll certainly keep on their schedule of raising unless something terrible happens.
You've said to us in the past as well that as far as monetary policy is concerned, that's one thing. You're far more concerned about what we're seeing in terms of fiscal policy, what we're seeing in terms of trade concerns as well from this US administration. Dr. Rivlin, obviously we didn't get anything from the Federal Reserve here as far as fiscal policy is concerned, but we have this week seen the Treasury ramping up their forecast for the issuance that they need to provide. At what point do you think the market perhaps looks at this and goes, we need to be a little bit more cautious here, irrespective of what the Federal Reserve is saying in terms of their ramping up of rates?
Well, I think the Federal Reserve will stay on track. What we should be worrying about is that fiscal policy is too stimulative at the moment. We have a full employment economy. We have lots of problems, but one of the problems is not stimulus from the federal government, and we just added to that by increasing spending and cutting taxes. So I think people should be worried about the long-run trajectory of the debt and who's going to buy all these bonds that we're putting out there. But in the short run, it's not a big concern.
And what about trade policy? Because I know that's something you're concerned about as well. You're not alone. Many of your economist peers, more than 1,000 of them, signed a letter dated tomorrow that's due formally to come out tomorrow, calling on the president and Congress to abandon what they call protectionist trade policies. Do you think it's going to make a difference? Do you think that the trade policies that have been talked about by the administration will indeed go into effect as they've been planned?
Well, the main problem is that everything is so uncertain. The president came out with these steel tariffs, and then he said there'd be some exemptions and some countries, but not other countries. And then he's been extending the exemption for the European countries for another 30 days. That's not the way to make trade policy. In fact, I think he should have left well enough alone. But the real damage is nobody knows what's going to happen. And uncertainty is not a good thing for having steady and growing investment in our country.
Dr. Rivlin, what do you think the most important question now that the Federal Reserve is asking themselves? I mean, the big debate, as you pointed out, was inflation and actually why they couldn't explain that we'd not seen the sort of pickup that we were expecting. What's the big question now for them? Is it the impact of fiscal policy, whether it's a short-term juicing or something else?
Well, I think it is, does this economy overheat?
Yes.
And it might overheat in ways that are not just showing up in consumer inflation. I think that's likely to be fairly quiescent, although we don't know. But, you know, you could get a bubble in various asset markets and things that would be nervous-making and signals of overheating without having much inflation, consumer inflation.